will this precipitate a lost decade for Southeast Asia? Because sometimes when there's a loss in investor confidence, the sentiment and narrative sets in, and that becomes a reality. Right. Intellectually, you know that for every eFishery, there are other companies that genuinely are creating value. I do worry if that paints in the global investment community's mind a broad stroke of what Southeast Asia represents.
Welcome to Brave. Learn from Southeast Asia's best tech leaders. Build the future, learn from our past, and stay human in between. No BS on success. I'm Jeremy Au, venture capitalist, serial founder, Harvard MBA, science fiction nerd, and dad of 2 daughters. Every week, we debate startup news, interview changemakers, answer listener questions, and share personal insights. Join our movement of over 40,000 members and get transcripts, resources, and community at www.bravesea.com. Stay well and stay brave.
Hey Tiang, how are you?
Good. Been quite an intense, interesting few years.
Yeah. Our last episode was episode 287, which was quite a few years ago. And so definitely check out that episode to learn about your background and I think your experience becoming a VC and those learnings along the way. I think we want to catch up because one of courses now we get to do this in person. There's a big difference.
Oh yeah, that's right. I think the last episode was in 2020.
Yeah, exactly. And then I think the second part was, the Southeast Asia landscape has changed quite a bit as well during this time frame. Between like eFishery fraud to kind of like the state of exits versus interest rates. Yeah. So I think a lot of things have changed along the way.
In between, I had another kid.
The most important thing, the best investment of all.
Yeah. I don't know what the DCF on that looks like.
The cash outlay of $500,000 over the next 20 years. And maybe my kid will take care of me when I'm old.
Yeah. The expected value there,
I'm just saying, like, if you want to do a discounted cash flow, then I think you gotta, take that into account. So I think that's interesting. So all of that is, I think, a question mark for all of us. So why don't you tell me what's been going on in your life?
So like I said, had another kid. He's 11 months old now. Proud father of 2 boys. That keeps him pretty busy, right? And since we last chatted, well, just maybe a quick reminder. I co-founded Forge Ventures in 2021. We ended up raising just under 24 million. And between then and now, we've made up around 18 investments across the region. It's a generalist technology fund. That's the strategy. And with a concentrated portfolio approach, we've done a few investments in consumer, in fintech, software, enterprise. Lately, we've made a few more investments in climate and energy. And it's across Singapore, Indonesia, Philippines, and Vietnam, right? So we definitely have a bit of a view, sitting headquartered here in Singapore, but looking at the region, right? And getting a sense and pulse of what's been happening in the past few years. I suppose you and I will read the same headlines. It's funny because I bumped into Willis the other day. Willis, the founder of Tech in Asia. He was like, how's it going? You write the headlines, I read them, you tell me, right? It's been a pretty dynamic and challenging, and some might say intense couple of years. You mentioned eFishery, right? It's probably the biggest headliner, symptomatic of what's going on in Indonesia and the wider ecosystem. But at the same time, we also see opportunities and green shoots within the portfolio. So,
So I think definitely a lot of change happening. I agree with you. I think eFishery was a big one, right? It was a big scandal of fraud. And I think definitely, I don't, like you say, it's symptomatic, but also ended up being like a milestone that I think probably will set the chapter.
It's a clearing event.
Yeah, it's a clearing event. And I think we all had known that everybody knew that Indonesia had issues with accounting. And there's a lot of due diligence that was being done beforehand to make sure that people didn't want to bad deals. There was also some controls that had been done. But I think what was interesting about eFishery was I think the scale of it, the sophistication of it, and also the fact that it got to such a late stage before it was caught. So all of the various auditors that signed up for the books, but also the due diligences that had been done by seed round, Series A, Series B, Series C, all of it failed to all catch it. So I think it caused a lot of pain because the late stage investor can't survive such an event.
Yeah. Yeah, I mean, reputational damage aside, financial losses aside, I think one way to look at it is there's a pessimistic view to this, I think, right? Which is, will this precipitate a lost decade for Southeast Asia? Is something like catch myself thinking about. Because sometimes when there's a loss in investor confidence, the sentiment and narrative sets in, and that becomes reality, right? Which is something that there's a non-zero possibility of it happening, which would be a shame actually, right? Because intellectually, you know that for every eFishery, there are other companies that genuinely are creating value, are building real businesses, are trying to innovate against that backdrop, right? So I do worry if that paints in the global investment community's mind a broad stroke of what Southeast Asia represents. But on the other hand, I think if you take a more optimistic view of this is not a foreign or a surprise for any growing ecosystem. Silicon Valley has its own version of Theranos and FTX, you know, and the scale is probably 10 times, that of eFishery, maybe 100 times, right? Because of second and third order effects. China, no shortage of such stories, right? In the ecosystem. India, there's Baiju's and what have you, you know, in recent memory. So, you know, I'm not saying that this is the right thing to do, but it's a sign of a growing ecosystem, right? And it comes with the job description, right? If you're a venture investor, your job is to take the highest possible risk that you can underwrite, because the flip side of that is the highest possible return, right? And it comes with the territory. You know, many literature has been written around founder archetypes, what kind of founders and personalities will drive what kind of outcomes. And what we all tend to notice then is that exceptional founders come sometimes with interesting personalities. It's just part of the business, right? You know, and a non-zero percentage of that spectrum of founders would be people who are really good at telling a story, putting up a front, but might not be doing the right thing, right? And we just have to know, how do we manage that, you know? So I'm ultimately optimistic about the long-term viability of Southeast Asia as an ecosystem. And I do think that innovation and the pace of technology doesn't change, right? It will still be a positive force for the region. Obviously, there's a lot of work to be done collectively as an ecosystem, whether it's founders, it's investors, you and I, right? And the wider, you know, kind of ecosystem, capital markets, we can talk about that. But net, I'm still pretty optimistic.
I think I'm also optimistic about the talent in Southeast Asia. I think there's good talent across the region, and there's strong like macro drivers, right? I mean, there's still population growth, still middle class growth. I think the playbook of what needs to be built is known, right? I mean, for example, you know, I think Singapore and Malaysia's GDP per capita is like, you know, 5 to 10 times. And then Malaysia to Indonesia's GDP is about, you know, kind of like 3 times, right? So we kind of like know that Indonesia, as it grows richer, will look more like Malaysia. One thing I think about is like, you know, every coffee stall in Malaysia seems to be like air conditioned, right? You know, because it's so hot, right? So for me, I look at Indonesia and Malaysia, I'll be like, oh, the big difference between Indonesia and Malaysia is all your restaurants become aircon more, right? You know, so I think there's a big shift that's going to happen, and it's going to happen eventually over the next, 10 years. So I think there's this dimension that I think there's a known tailwind. But I think the tricky part that I'm struggling with is like that people are debating is venture capital, that asset class that shows up, right? Because even an aircon story, you know, maybe there's a private equity, you know, kind of playbook that you're doing. Maybe it's like traditional small, medium enterprise lending. And, you know, so those are things that are more clear. And previously, you and I had discussed like there's about one unicorn being minted every 2 to 4 years, right? I mean, last year we said every 2 years. Now we're saying looks like this Lao looks like one every 4 years. And that home run is so critical for the asset class or venture capital to play out.
I think those are very good thoughts. So maybe one way to think about it is this, right? Taking a step back and really looking at the state of play today, and looking at reality. So what's the reality? The reality is that if you compare Southeast Asia to global ecosystems, DPI has been pretty lackluster, right? It's just a fact. From a value creation standpoint, therefore, you know, one would ask whether all the companies are marked to the right mark, right, in the ecosystem, you know. What else? A lot of companies that are built, right? Some are regional, but most are still pretty localized. So there's a question of TAM. How big can they get? And fund sizes, right? It's also a commentary on if I raise $1 billion fund in Southeast Asia, how many checks should I write to enhance the probability of me returning the fund at least, if not genuinely producing profits for investors, right? Those are all questions that we have to contend with, I think. And I think that's independent of whether you're in Singapore, in Indonesia, Malaysia, Vietnam, right? One thing I always think about and have, and I have a bit of a debate with people on, it's kind of what you alluded to, which is, does the power law exist? Right, in Southeast Asia. If you really think about it, the definition of power law means that a few investments drive the majority of the returns of a fund. And if you zoom back out, the entire ecosystem, right? I think it's it doesn't go away. But the difference in Southeast Asia, I think, it's the assumption of there's a unicorn every year might fundamentally be wrong. So maybe the outcome that you underwrite to, it's a $500 million company, 250, maybe even 100. And if that's the outcome that you underwrite towards, right, the rest are just math. It's a 10 million seed fund or 20 million seed fund. How much you need to own for each outcome, because that's the expected value. And if you work backwards, if that's the case, then here's the entry valuation based on relative to the ticket size that I could write to invest in, right? And you kind of do the math that way, right? And really hold that discipline. I think that's something that we need to be very clear-eyed on, instead of saying this is the TAM, right? And it's really going back to first principles to see, hey, these are the companies that we invest in, these are the sectors, here's the potential TAM, this is the outcome we're underwriting, ticket size, ownership, and then there you go.
I'd love to double click into this because, I think this is actually a really big piece, right? Because I think when we talk about the story of Southeast Asia, we always talk about the macro piece.
Yeah.
But I think the crux of it is, what's the power law? I would say the third dimension is whether you as a fund are good at picking those power law pieces. Right? So that's
of course.
And obviously, for this third chunk, there are two strategies, like you said. One is your strategy, which is concentrated picking, which is like, some people call it zero hero. Right. And then of course there is the kind of like spray and pray, or the index fund, which is doing like 40 or 50 investments. And this would be looks a bit more closer to like iterative. I would say East Ventures as well. Right. So like different. So I think there are different picks. I think the part that people are very comfortable competing is like, okay, I can pick better, or index fund is better. I think, you said something before the podcast was very true, which is right now there's about one unicorn every 2 years, maybe now one every 4 years. So it being publicly listed has that outcome. And what that implies is that if it's one unicorn every 4 years, then only 2 VC funds deserve to exist, because there's only one home run every 4 years. Each VC fund is only 2 years. And people can either invest either at the pre-seed, seed, and the other one is the Series A stage. So there's only 2 bites of the apple before it goes to the US.
Before it goes to the US.
So in the scenario again, is if it's one every 4 years, then only 2 VC funds will have DPI and IRR. And if it's one every 2 years, then there'll be about 4 VC funds that will have that VC level return that's comparable to a US or a Europe fund. So I was just kind of curious about that, because this is actually your insight as well. So I'm just kind of curious about how you think about that.
So look, what we ultimately realize as a seed fund is that, again, if we do the math really quickly, right, back of the napkin, let's say we're just under 25 million fund one, right? Let's say about 20, right? To return the fund, assume you hold 10%. Of the company at the eventual exit, right? That implies you need to create a collective enterprise value of 200 million. And if you assume half of the portfolio companies would die, that assumes your expected value should be 400 to 500 million collective EV, right? And if you assume that from first bite to exit, you're suffering about 5 to 10% dilution of your first investment ticket should be around 15% plus minus. So that's the way we kind of do the math. I think what's more nuanced than this, it's really understanding and spending time, to your point, selection. Selection comes in 2 dimensions, I think, right? Besides selecting, obviously, the best founders we can find, it's the sectors and markets that you underwrite towards. So one thing we're noticing in our portfolio companies right now is it's bifurcating into a bimodal distribution, right? On the one hand, we have companies like Baskit, based in Indonesia, Pretty localized model in that they create technology and platform for distributors for the supply chain in categories like FMCG, consumer electronics, right? Really hard to regionalize and definitely harder to globalize. Still a huge problem in Indonesia, still very valuable, probably a large market because it's not a 10 billion or $1 trillion market size. So working backwards to that, then what's the outcome you're underwriting, right? And subsequently design the entry point. Versus like the other modality right now we're noticing. A great example is a company called Mito Health, MITO. I invested in Mito Health maybe 2 years ago when Kenneth showed up with an idea. So and subsequently they launched it in Singapore, got into Y Combinator last year. Now they're available US nationwide. But if you really think about the TAM then, right, it started from Singapore, such a small market. Original hypothesis was, can this be developed Asia play? Because price points, demand, level of quality of service that you need to provide seems more like a developed Asia play, right? But the founders credit found a path and way to the US, which is 100 times larger in terms of market size than what we could see here in Asia. And the latest numbers have shown that, within 6 months of them launching in the US, they've far surpassed their revenue in Singapore over the past 2 years, So there's a bit of hey, can we build from here, start from here? Let's build a path towards a larger market. And obviously, if in that go-to-market motion, then the outcome we're underwriting, it's definitely much higher than a very localized play. So so a lot of lessons learned in that, and really it's about coming back to selection here. Besides, obviously, the baseline, the bottom line is we need to work with very good founders, exceptional founders. Also be very clear-eyed on what's the execution, what's the outcome we're underwriting, and working backwards from exits. And that's how we think about it.
I think that's really good because what comes up for me is that even though I think we're saying that there's maybe only 2 to 4 slots of good VC funds that can do well in Southeast Asia currently. The glass half full version of that is there are 2 to 4 slots. So the question is, can you become and are you good enough to be one of those 2 to 4? And I think what's interesting is that I know both those founders, that startups, right? We are both investors in Baskit. So that's one. And then also both of them, both Yen at Baskit and Kenneth at Mito have also been on the podcast as well. And I think I agree with you that actually I see that split as well, which is that I think that the old thesis of a regional story like Grab or like a logistics player, that story seems to be, still available as a play for the right player. But it feels like the very deeply localized, capital efficient route, maybe even a local listing is a path, right? And then another path, like you said, is the Singaporeans who understand South America and kind of like have that corridor as well. So I think it really boils down to that ability to pick as well. Are you good enough to be the, I don't know. I guess now it's Squid Games. It's Southeast Asia. Previously, everybody thought that every fund was going to do well. And now, if you're focusing on Southeast Asia only.
You also know that's not going to be true, right? It's not going to be every fund's going to do well. I think such is the nature of market cycles, right? In an up market, everyone's a genius, right? In a negative market, that's where you really see more intensity and stress in the ecosystem, right? But you always know that if you take a step back, it's always going to be a normal distribution curve, right? Some will do well, some will do okay, some will do exceptionally well, right? And we spoke about power law. That's why this is an incredibly hard industry. The power law means that maybe 1 or 2 of companies within the fund will drive majority of the returns in your fund. But it also implies that industry-wide, only 1 or 2 or 2 or 3 funds across an entire industry of maybe 50 or even 100 potentially, right, drive majority of the profits of the industry, right? I think there's a report from Silicon Valley that came out recently. It's even more concentrated than ever. The entire industry, in terms of LP dollars, concentrated in maybe top 3 to 5 names. Majority of profits concentrate in the top 3 to 5% of the funds in a given vintage. But look, I also know that the world's changing really quickly. I'm pretty proud that we're 30 minutes in, we haven't even talked about AI. The world's changing really quickly. Politics and local regulators and market makers are trying to figure out the capital market problem. It's not that we're not aware of the gaps to be plugged and the problems to be solved. And the pace of technology has also forced everyone to rethink company building, product building, and value creation. GPT, I think it's really a huge clearing event in that regard. Going back to first principles to rethink from the ground up what it really means. One example that I keep one thought I keep working on these days, it's if you look at the past 10 years, a lot of investments in Southeast Asia is really driven towards investing behind consumption, right? And some of the biggest assumptions are young population, growing middle class, higher spending power, higher GDP per capita, to your point. And that's done pretty well for a lot of people. But I think the next 10 years might not be 100% consumption. Again, given what we know now about GPT, right? Could it be a mixture of consumption but also productivity gains, right? People always think that, oh, next year, enterprises are going to start adopting SaaS, cloud, whatever. And that next year never comes somehow, right? Which is astounding to me because if you look at some of the biggest enterprises in Asia, Southeast Asia alone, right? Not everyone's on cloud yet. So the SaaS story still not played out. And if you add AI to that, I think there's still a lot of room for growth, in my view, right, for the next 10 years. Especially now that a lot of the individual employees, contributors, younger generation are more and more adept and open-minded to technology and using new ways to create value using generative AI. I'm actually pretty willing to make a good bet on the next 10 years that Southeast Asia is not just a consumption investment pattern. It could also be a productivity-driven one.
Yeah.
Right.
Yeah.
And we're already seeing some green shoots in that, especially in Singapore, right? So Mito Health, obviously, good example. We're really investing behind the trend that people care more about their health. There's also a B2B play behind, can we make labs more efficient? Can we make doctors more efficient, right? Baskit, for instance, right? Not a consumption play, right? There's consumption trends driving that. Yeah. But ultimately, it's a productivity story. And we're seeing more and more examples of that coming out here.
Yeah. I think that the SaaS story is interesting because it's a tired story.
It's a tired story.
But it's interesting for you to bring it back. So the reason why it was super hot 5 years ago in the 2021 boom for SaaS, I think Ping and Vercel has been a big component, which is saying like it's affected GDP per capita, which is that if humans are cheaper than SaaS, then it's hard to buy, right? Or another way of saying it is if the job that you're trying to replace is one American with SaaS, is you get to hire one less American, it's going to cost you $100,000 USD. And the software is going to cost you $1,000 in a year because it's $100 times the 12 months. Then it's 100x return straight away for year one, right? Yeah. So that's why people kind of switch. But if your labor in Southeast Asia is cost $5,000 per person, then you could hire 20 people, right? And then your software is there. Does it really, have the same ROI answers?
Yeah, no, I get that. I think here's obviously these are anecdotal examples, right? We have a portfolio company, just at the most recent board meeting told me that they axed 20% of their headcount. And it's not because of, it's cost cutting for sure, but cost cutting to a productivity. And because they discovered that instead of saying, I need one more engineer to write 100 lines more of code, right? I just pay $20 per month for Vercel. Everyone's on 10 times more productivity, right? And it's noticeable compression of the journey from idea to production. And it's a very real 20% cost reduction. Quite a few portfolio companies that I have in Vietnam, Philippines, Indonesia. Okay, maybe not Vietnam, but more Philippines and Indonesia. They're having trouble hiring engineers that are high quality. So they almost always end up hiring in Singapore, India, Vietnam, right? Some parts of Malaysia. But now if they do manage to find a good one in Indonesia, I would turn that 10x engineer into an X because now they have access to, Vercel, to whatever, right? I think, and these are the next generation of companies being built in our economies today, right? I'm also seeing evidence of that happening in local conglomerates, telcos, right? And it's the attitude shift from should I adopt SaaS to I think AI is like an important thing. Everyone's at least willing to try a POC on AI now. Yeah. And these are directives coming down from the board, coming down from management, right? We need to figure out AI. It's super interesting. The attitude change of this is another software to this is AI, right? I mean, it's still software, but AI, right? Just gives everyone more air cover to experiment and take a little bit more risk, right?
Yeah. I mean, I agree with you because I think AI has changed the story again.
Yeah.
Which is why we're bringing it back. Because one is, I think it lowers the cost of SaaS technically. For the same amount of SaaS, technically, I think you can drive the cost 10x lower for the same functionality, right? So I think that cost bar that we just talked about, the ROI, I think AI really kind of like drives that cost basis down. But I think it's not going to show up as lower cost SaaS. I think it's going to show up as, like I said, more power, right?
More power.
And I think the more power parts of AI is actually the areas that Southeast Asia companies kind of struggle with, right? So it's like English writing, like, marketing, code writing. Like this is what AI is good at. And these are skills that are just difficult to hire. You can't hire 20 Indonesians versus one American to get the copywriting or code writing. Whereas I think the traditional version of SaaS was very much like, I don't know, process checkpoint of, I don't know, finance approvals. Then that was something that 20 Indonesians could have, been seen as a serviceable, what was the word? Baseline that you just want to keep. Because,
so it's no longer just about, if you really think about the atomic unit of jobs to be done, the biggest difference that I see when it comes to software, it's the paradigm of SaaS is about automation and it's very defined workflows. To now, a lot of the promises of Gen AI, some of them realize, to your point, marketing, sales, coding, translation. The user interface requires zero training.
Right.
It's astounding I was just listening to a podcast, I can't remember where I heard it from. ChatGPT went from 0 tokens processed per day to like close to 1 trillion per month, something like that. And it's astounding because this is probably one of the most viral software products ever. And it's not even social. Unlike Facebook, unlike Google, where inherently there's virality to the product, ChatGPT is not social. But the rate of adoption is like this, right? And I think that's a lot to do with the level of the ease of use. And they've also solved when I was at Evernote,
I use buying and paying for Evernote.
Thank you. Brings a tear to my eye. We have a department that focuses exclusively on localization. And we need to think about, how does the software look in English, in Japanese, in Russian? Obviously it's built into the product, but also it impacts sales and marketing, and it impacts the way we think about user experience from the user point of view in different languages. ChatGPT has none of that. Today, you can, and even within the same sentence, you can interact with ChatGPT, English, Chinese, Malay at the same time, no problem. So I think it's a lot to do with that aspect of today, the software products of today. And it's only going to get better, I think.
Yeah, I think that's the crux of it, which is that ChatGPT is good and it's only going to get better, right? So I think that's where I feel like founders today should take that approach, which is if ChatGPT continues to get better, but it linearly continues to improve, I think there's a lot of opportunities that just open up as a result.
I think so.
Yeah.
But also it means that, more importantly than ever, you really need to have the low-hanging fruits of, okay, this is a manual process that I automate. Those go away very quickly, right? In terms of a new company to be built, right? More importantly than ever, it's really about your insight in a certain industry, whether you really, really understand customer pain points, and point your solution towards that. Rather than let me collapse step 0 to step 10, from step 0 to step 10 to 0 to 5, right? And I charge you based on the cost, say from 5 to 10. I think we really have to rethink what that means, especially in business model terms. To your point, right? Before we understood as cost savings as on a per human basis, but today I think it's less clear. It's also about on a per human basis how much more I can get out of a person, and it's no longer per head, per seat, per month. It's really about quantifying the value that my product brings to you, and how do I capture some part of that value.
So let's talk about that piece of value, and now we're getting into AI, I guess. What do you think that means, right? Do you think that means that the green shoots plus AI means VC is going to be back in 2 years? I'm just kind of curious because the joke is, everyone's all waiting for power law. It never happens anyway.
Yeah. Well, the power law could be more extreme. I think one potential way to think about this is the power laws could be more extreme. I'm sure you've met quite a few. Well, I've met quite a few teams where two people they vibe code a product, right? And it's a good 5, 10, 15, 20K MRR, sustainable. I don't need VC funding. And there are more and more examples of that. And it gets very, very niche. I heard an example that day that someone created a messaging app, but just for LinkedIn. That's it. 15K MRR, two people. Yeah. I'm never going to fundraise. Good for you, right? Or like a image generator for F&B, just F&B. The MRR. It's not going to fundraise, right? Good for you. So I suspect we'll see a lot more examples of that where, you have a problem, you know how to build for that problem, you solve it. Is this a business? Sure, right? Could this be a venture-backed company? Big maybe, right? And the other extreme then would be something like a livable Vercel, right? That just catching lightning in a bottle, you scale that way, you develop for a large market, and the outcome is a very extreme. E610 just published what it means to build for in the AI era recently, right? At least in the US, they're seeing if you're a seed company, AI native, you're getting to something like a 3 to 5 million ARR in 12 months. And that's just median, right. And if that's median, I don't know what the exceptional one looks like. So maybe the power law becomes more extreme, But I think coming back to Southeast Asia here, my excitement really comes from not, hey, am I building the next AI product for Indonesia in this market? Though there's a non-zero possibility that happens. But I think the shift in mentality of like post-GPT, because we already established that OpenAI will get better over time. How can we build companies more efficiently? It's no longer about raising gobs of venture dollars to hire teams of coders, programmers, or product managers. It's really about if I can use this technology to solve a problem cheaper, faster, better, and it's still a big problem, i.e. venture backable idea. I think there's a lot more interesting company building happening here. And it probably is going to be more efficient too.
Yeah. I think what's interesting is that, we were talking about America, and one of the concerns that's coming up is that there is a suction effect away from Southeast Asia into America as asset class, right? So when you talk about, hey, the power law might become more extreme, but a lot of the AI that's being driven, innovation is being done out of America. So that's where the first gains are. I think that during the pandemic, everyone was like, Silicon Valley is over. It's about the rest of the world. And now there's a little bit of a suction effect where Silicon Valley is back and people are moving to Silicon Valley. And so you see like a lot of VC funds, even Southeast Asia, kind of like focus much more on the US, say diaspora, I think that's why. And our group is, like you said, focusing on Australia, New Zealand, or focusing on India. Some of them are focusing on China. And I think there's very little of it going the other direction. So I'm just kind of curious about how you feel about that.
Yeah, unfortunately, I think speaking purely in capital market terms, right? Whenever a market downturn happens, when liquidity goes out, the Southeast Asia pool is inherently very thin, right? When liquidity goes out, less risk taking, less risk capital, and that's just reality that we have to contend with. Today, we're also seeing a lot more polarization in the world stage. US is getting more and more protectionist, or collectively the West seems to be a lot more protectionist, right? And then there's China. India seems to be having its moment in the sun, right? Which is awesome. And then there's Southeast Asia, right? The liquidity pool is very thin, I was listening to, I'm sure you know the Acquired.
Yeah, of course.
Awesome, right? The most recent episode is an episode on Google. People always forget that Google had only ever raised one VC round. It's mind-boggling, right? They raised an angel round, 10 mil post, right? And then they raised a venture round, Series A, profitable, and then that's it. And the reason why they did not raise another venture round was because they're profitable. And the reason they're profitable is because they can't fundraise. Because right after Series A, it was the dot-com bust, right? And that enforced a lot of discipline on company building, on really thinking about business model, really thinking about how do we become a higher quality company, right? And I see a lot of similarities in today's environment, right? There's a lot more emphasis on path to sustainability at least, right? If not, is this Is this profitable?
Yeah.
How do we have a discipline to build towards that outcome?
Right.
Net, I think it's going to be a healthy forcing function for Southeast Asia.
Yeah.
Especially acknowledging the fact that the liquidity pool in the region is already quite thin,
right,
in the capital markets. But that doesn't mean that there's no business to be done here, right, in Southeast Asia. To your point earlier, macro in Southeast Asia, it's sound, right? GDP growth rates across the region are still, in the 5 to 6% range, thereabouts, still healthy. So there is business to be done. It's just how do you do it, right? How do you capture that value and grow alongside with that? With the region. I always feel like, as investors, as participants of the capital markets, whether you're private or public, VC or PE, we live in a little bit of a parallel world to the real economy. There's always the difference between Wall Street and Main Street, right? Wall Street lives in a different market mechanism than Main Street. I think Main Street Southeast Asia is still pretty robust. Is this limited? Right? It's all doom and gloom.
Yeah. I think I love what you just said, right? Which is Main Street is doing well in Southeast Asia.
Yeah.
Business is still going on. People are still eating their noodles.
Yeah.
Eating their beef rice bowls.
Yeah. I just walked past the Labubu store and the Pop Mart store. Business is booming.
Business is booming. Yeah, it's just for these cheap dolls that could have been Doraemon or could have been Ultraman or could have been whatever. And now it's a Chinese brand.
Yeah.
So I think a lot of gains for, like, for example, Chinese brands like expanding to Southeast Asia, franchise operator, fundamental Main Street.
Yeah, because clearly they see opportunity here.
Yeah.
I think that's my message to founders, right? Which is before times of reading Tech in Asia, TechCrunch, someone raised another Series A at what valuation. Not that it's a sign of success then. I think it's more so shouldn't be a sign of success today.
Yeah, exactly.
It shouldn't be a sign of validation that your business is working. Right. Your business is working when you're profitable, and then you have a business.
Makes sense. On that note, I'd love to kind of like slowly kind of like transition into kind of like your own personal side. So you also have some changes as well. You've become even more of a dad.
Dad plus.
Because you already were a dad last time we chatted, but now you add a second kid.
I've grown my portfolio.
You grow your portfolio, so diversification. You're like, this first one.
If it doesn't work out,
it's another home run, number 2,
No, it's been a pretty rewarding journey, and it sounds corny, but I do learn a lot of I draw a lot of parallels, and I did learn a lot of lessons by being a parent, and parallels between being a parent and being an investor. What struck me as the most important point to really, as a point of growth for myself, it's recognizing the fact that how much you just cannot control. And it works both in the living room and the boardroom, right? You can influence, you can advise, you can put in place guardrails, but ultimately the decision to do something is in the hands of the child, and it's in the hands of the startup founder, And I think that observation just reinforces each other. Some boy one is like 7 years old now. Definitely a lot of independent thoughts these days. And it kind of reinforces both day job and that life. But I think I'm all the more better for it. Also a maturation of my ongoing maturation of an investor and being hopefully a leader in the boardroom.
How have you changed as a leader in the boardroom because of becoming a dad squared?
Being dad to 2 boys means it's a forcing function of really need to be more productive and efficient with my time.
Yeah.
Right. And one example of that would be setting very clear expectations of why are we even sitting down to have a meeting, for example, right, out of many things. And being very clear on, if we're having this board meeting, let's have an expectation of are you looking to make certain decisions which requires everyone's input, right? Be more disciplined on sending materials beforehand so that everyone can be very efficient about consuming information and contributing to the conversation, and really have very clear expectations of if a decision needs to be made today, or do we have more questions and all that, and we just really have a cadence of those things. That's one example, and there are many such examples, right? Because really, by 5:30 I really need to leave my office to pick my kid up.
Leave a kid at school.
No, I cannot be like, it's okay. I'm running 20 minutes late. Why don't you play 20 minutes more? There's no such thing, right? It's a forcing function.
Yeah. No, you're making me remember all the times when I was like at school and I'll be waiting at the school steps.
Yeah. Yeah, I'm like, yeah, so that's literally the image in my head. He's twiddling his thumbs sitting by the canteen. And I can't even text him because he doesn't have a phone, right? So yeah, it's really that enforced discipline.
What's your philosophy on technology for kids?
We delay screen time. So me and my wife, we've decided very early on that we want to delay screen time as far out as possible. Obviously, many research has been done on the attention deficit starting from our generation and younger, and a lot of that contributing factor comes from screens. It's an established fact, and we want to be very disciplined on that. Between 0 to 5, at least for boy 1, had minimal to no screen time. Right, he doesn't have an iPad, definitely not a phone. These days we're a little bit more loose. Because one interesting observation that we had made was because he had 0 screen time. At one point, he didn't know what Paw Patrol is. He didn't know what, and his friends start telling him about like Sonic and Paw Patrol and whatever. And he's missing out on, he can't engage and he's missing out on conversations, right? And it's impacting his social life. Yeah, right. So like, oh God, so we have to solve it. So now we let him watch Paw Patrol. You no longer watch Paw Patrol, but you get the point, right? So we let him watch some Netflix, right, so that he can engage in dialogue. But it's very regimented, right? 30 minutes per day, maybe an hour during the weekends, but not before you finish your homework, right? So there's some kind of routine to it. I think the intention there really is about helping him build good habits that he can keep over his lifetime. Because I can't tell him in 20 years, should you be an AI researcher or a doctor? But I know for sure that to be good at either, you have to have good habits. Right. And that starts from home.
Yeah. I just want to say, like, when I went to America to study, one of the biggest things I realized was that so much of the conversation then was always about TV shows. Yes, because it was always like, have you watched Game of Thrones? Have you watched Star Wars? Nobody watched Star Trek. So, so you get away without that one. So, and I always remember, like, as an international student back then, it was very much like, okay, I got to watch this stuff as just research.
Cultural immersion.
I got to watch this stuff. So,
but it's very true, right? I think part of it is about, a large part of it is participating in the cultural zeitgeist of the moment. In a more atomic unit, it's about engaging with, socially and being very culturally sensitive to the happenings of the world, right? If the way that you achieve that is by watching some TV shows, then go for it. Sometimes I think about this, right? You and I, we're millennials. We grow up with watching TV, and we're fine, right? I remember at one point, people were, if you watch TV 24/7, you can be dumb. I think we turned out fine.
Reading Harry Potter is satanic. And it's going to corrupt your morals.
Right. So, but we turned out fine. So what's the anxiety and difference between then and today if I give the kid an iPad? My conclusion is that the screens of today are fundamentally different from the screens of yesteryears. Right. For one, it's interactive. Obviously, when we're growing up, when we touch the TV, we get scolded. It's HD TV, whatever.
Spoil it. Put your fingers. Greasy fingers.
But now the intuition for a kid is, why is this broken? So I think interactivity is a huge difference. I think more I guess more important than that is the on-demand aspect of screens today. Remember last time, like when we were watching programs on TV, we have to wait. If it goes away, it goes away, right? If you miss it, you missed it. And you always hold your pee until the next advertisement, right? And then you try to rush back again. No such thing today, right? If I want to pause, I pause. If I want to watch it now, it happens now, So I have to explain to my son that, no, if you miss Doraemon on 9 a.m. Saturday, you missed it, right? It's not streaming. It's not on demand, And I think that short circuits something in the brain, right? Where you expect instant gratification. There's no delayed gratification. It doesn't help you understand anticipation and patience. It takes away some aspect and element of surprise sometimes, and which is pretty much the definition of life, right? And I think that kids today, because of that, they lose some aspect of that, right? Just the ability to be patient, to sit in uncertainty for a bit, to anticipate, to work through frustration, and having that ability to just concentrate. That's, I think, the biggest difference.
Yeah. On that note, any parting words of advice that you will give to founders or to executives today? Look at Southeast Asia.
Patience. I think the same the same point that more so than ever, instant gratification is mostly never a good thing. All of the best founders I work with, they have this ability to delay gratification, right? And really thinking in terms of the bigger picture, the longer term, rather than the next round and the next valuation, you know. And the ability to really sit in uncertainty and frustration and just work through it. I think it is what's going to differentiate you and the rest of the your competitors or other founders.
Yeah.
First principle thinking, I think, is quite important, right? Going back to first principles to really think about why are you building this business in the first place? How do I make this a business and not just a product, not just a concept, right? Going back to fundamentals, you know, especially in times like this, I think it's important. You know?
Yeah. On that note, thank you so much for sharing.
Thanks for having me. Yeah.
Thank you for listening to Brave. If you enjoyed this episode, please share the podcast with your friends and colleagues. We would also appreciate you leaving a rating or review. Head over to www.bravesea.com for member content, resources, and community. Stay well and stay brave.